here we've logged in as a seller, okay? And the seller has integrated their Amazon FBA channel. In this particular case, the seller has 4 different SKUs in inventory, okay? And they can create 2 types of offers. They can create an individual offer, which is one item that's in their SKU, or they can create a bundled offer, which they can choose multiple SKUs to create an offer of those 2 SKUs in one bundle. And how that works is with an individual offer, they would set the inventory amount that they put onto the exchange. In this particular case, let's choose one item here and create an individual offer. They have 213 pieces in stock. They received $9.49 after FBA fees per sale that they make on Amazon. And they need to choose how many of those 213 they want to put on the exchange. Let's say that they choose that they want to put 200 of this SKU on the exchange and they want to start the price at $9.40 for one piece. Obviously, just to give you a little tip as a seller, you wouldn't want to give a heavy discount if someone's only taking one piece. The goal here is to raise money against the goods and the future sales. And so you have to give them a reason to give you more money. So the more quantity, the higher the discount. And then you set your rules. And you say, well, out of those 200, if someone takes 100 or more, I'll give it to them at $9, which is a 5.44% discount. If somebody takes all 200 or more, I'll give it to them at $8.50. Okay. Which is an 11.65% return. Okay. Then they create the offer and it would go into the exchange as an individual offer. Okay. That's one type of offer they can create. Now, here, I'm not going to do that. I'm not going to actually create the offer because this is a live account. And of course, I'm not at liberty to do this for the seller. He has just given us permission to use his account for the demo purposes.
Shawn, can I ask a question here?
Yeah.
So let me see if I understand it so far. And of course, the viewers, please also drop comments, ask questions. We'll get back to you here on YouTube or wherever this video is going to be. But say I'm a seller, right? So, and I put 200 units of some product on the exchange. And the idea is if an investor decides to, and he believes in my product, right? I assume, and sees the statistics for my product that it's getting some sales, etc. Then investor says, okay, seems like this product will sell in the future. So I want to buy the future sales, means that, and a seller is offering 200 units for potential future sales. And the investor can pay the money upfront at specific rate. Say they say, okay, I'm going to take 50 units, or what is it, 150 units it was, and I'll take it at a specific rate. So that means now this money will go to the seller. And once the sales occur, the investor will get basically the profit from those sales because they're going to be selling obviously at higher rate vs what the investor gave. I am just trying to understand the logic kind of.
Exactly. So with that being said, you're exactly correct. When the seller offers this investment offer, okay, 200 pieces he puts on the exchange, an investor comes in on the other end. And let's just say they get executed at 100 pieces for $9. Okay. They're going to bid time just like you bid on stocks. If it gets accepted, meaning if it hits the rules that the seller set, it would get executed. Let's say the 100 pieces gets executed at $9. That's $900 minus CGX fees would immediately go to the seller in real time. They no longer have to wait for one by one sale to occur. They don't have to wait for Amazon to pay them or the marketplace to pay them every 2 weeks. The money goes to their wallet. They can extract that cash in real time. Okay. Now the investor on the other end is the person waiting for the sales to occur. Every time the sale occurs for $9.49, now that could fluctuate a little bit. The sales could slow down. The sales could speed up. That's a risk that the investor's taking. Okay. They would make that return until they're fully paid back for the 100 pieces they invested in. Now, there are some rules that we put in place that the seller must follow. So at the time of the execution of the trade, we do provide a 2-week high-low price and a 52-week high-low price to the investors.
Mm-hmm.
And seller, after the time of the trade, is restricted from reducing the price below the 2-week low. Okay.
Mm-hmm.
So when I say restricted, they agree on the agreements that they sign in the beginning of signing up to the platform that there are a couple of things they can't do. Okay. They can't drop the price more than 1% below the 2-week low. Okay. Because obviously they use repricers, so they'll need to fluctuate a little bit to stay competitive. And they cannot reduce the PPC spend below 1%
Uh,
at the execution of the trade.
Interesting.
This protects the investor a little bit from sellers doing unethical behavior on the platform. Okay. Remember, the goal here for a seller is to become a power seller on the exchange. Consider this the New York Stock Exchange for sellers. They're going on to this and they want to raise more and more and more capital and become a very strong seller on this so that more investors come in and invest in their goods.
Mm-hmm.
Now, they can see multiples of cash flow without having to wait months at a time to see the sales occur. They can take that cash, they can buy more inventory, they can buy more
Yep.
SKUs. They can go buy a house if they want.
Yep.
We're not asking them to invest back into the business,
Yeah.
but the goal here is to make sure that there's liquidity to an extent where the seller now does not have to take loans, does not have guaranteed monthly repayment terms, does not have interest rates. The seller now, if they give up 100 pieces of, let's say, Tide detergent, the only time they're paying back the investor on Tide is when they sell the Tide detergent, not when they sell the Dove lotion. And
Mm-hmm.
that's the difference between getting onto the exchange for capital versus going to lending companies for capital or selling retail for capital. For selling retail one by one, the way that they do today, they have to wait for 100 items to get sold. They have to wait for the marketplace to pay them. If they take a loan, the loans that come in, they base that loan based on their receivables, right? Oh, you sold 10,000 last month, we'll give you 3 grand this month in loans, but it's a 16% interest rate and you have to make a monthly payment,
Mm-hmm.
right?
Heavy.
This case, there's no monthly payments, there's no guaranteed repayment terms, there's no interest rate. You set the terms of the rules on what you're willing to give up in a discount. You only pay back when the item is sold and when you are paid for that item from the marketplace. It is
Mm.
completely anonymous, so the investor does not know who you are. Okay. They're not buying these goods wholesale from you and then selling on the marketplace against you to dilute your
Mm.
share on the marketplace. That is a big key here, right? You could wholesale the goods, but then now you have another seller that's going to be
Mm-hmm.
competition. This creates cash flow for you in real time. You can use the cash how you please. And as they sell, you pay back. If other items in your business sell, you don't pay back for this item. It's item specific. But this also allows the trader to get a little passive income, right? A lot of people are at home right now. They have cash, they're trading crypto, they're trading stocks. And this is just another way to create passive income to get involved in e-commerce, which is the most highest growing industry out there right now. Okay. So the one type of offer we just created is an individual offer. That means you chose one SKU, you set your rules, X pieces, this price or better. X pieces, this price or better. Goes out on the exchange. Now investors come in on the other end and they can bid in real time. If they get executed, they now own that many pieces at that strike price that they got executed at. And they now wait for the sales to occur. Now, when an investor comes in on the other end, they see all 200 of those pieces that we were putting out there. And they have the ability to take one or take 200. That's the benefit of individual offers. Okay. So we can have small investors, we can have large investors come in and they
Mm.
can invest
Interesting.
on however much they can afford. And we allow you to sell up to 90 days in the futures. This is why it's a futures market. What that means is if Vova came in and invested in 50 of those 200, Shawn can come in now and wait for Vovas to sell so that he can get the next 50. So I can come in, I would see that there's an investor in first position already, which is Vova. And we can see how many he took, and we can see how many he's been paid back on and how many are remaining. I can still bid up to 90 days out in projected future sales and take more of that inventory and give cash to that seller immediately on the spot. The seller doesn't have to wait for Vova to get paid back. He can continue taking more investment on that product up to 90 days out. And I would be positioned too. And then someone can come in, if it's still less than 90 days, can take position three. And that creates further liquidity for the seller. And the seller just continues to get cash in their bank account. Okay. Sure, they're making a little less in profit, but the
Yeah.
amount of cash flow that they're seeing is multiples of what they would see in a retail exchange, in a retail marketplace like Amazon or Shopify or their own website. And this is the difference between a business that knows how to grow and scale versus a small time business who looks at it in the old school methods of profit is king. Profit is not king.
Mm.
I'm a commodities trader. I'm an ex-commodities trader. I have multiple businesses. I have passive income streams coming in from real estate. The one thing I can tell you from my experience over the last 25 years is cash flow is king. And if you're not focusing on cash flow, you're losing the game. And you're probably going to get kicked out of this business over the next 2 to 3 years. Okay? Because there is just too much competition. It is not like it was 10 plus years ago, where every SKU only had a couple of sellers at most. Now you're looking and you're hunting down new SKUs to find to be able to put onto these marketplaces, and you're increasing the amount of channels that you're selling on just to create liquidity for yourself because you need the cash. Now we're giving you the ability to create that cash flow in real time without diluting your market share, without creating competition for yourself, and you're fully anonymous, so no one knows what you're doing and who you are. Okay, they're not affecting your business here. Now, that's the first type of offer that we created, is an individual offer. But I've also created a functionality for sellers to create what's called a bundled offer. What a bundled offer is we're going to choose two SKUs in our inventory, and we're going to create a bundle. And we're going to name this bundle, let's just say this particular item, because I can't share the actual item. Let's just say it's one of them is Tide detergent, and let's say the other one is Bounty paper towel. And
Mhm.
we're going to create this bundle and call it household goods. Okay.
Mhm.
We're going to choose now of these two SKUs how many of this each SKU I want to put into the bundle. So there's 213 of this particular SKU. I'm going to say I'll put 100 of these and 100 of this other SKU, which there's 175 total of.
Mhm.
And then I see that on the first SKU that I'm receiving $9.49 for each sale that occurs. And for the second SKU, I receive $9.68 for each SKU sale. Okay. And I'm going to put that of 100 of each, I want $9.25 for this one, and I want $9 for this one. So that's a total of $1,825 that I'm asking for 200 pieces between the two SKUs.
Mhm.
Okay. Minus CGX fees, the total payout to me would come to 1752. That's how much I would receive in cash today in real time if someone was to take the bundle. Now I'm going to set my rules, and I'm going to say anybody who gives me 1700 or more, sorry, 1800 or more, which is 25 less than the total ask, take it.
Mm. Mhm.
Now, this is a bundle, and the difference between this and the individual is this is for sellers who want to get a large amount of cash by bundling some of maybe their faster moving items with some of their slower moving items, and they want to create a massive bundle here to create, in this particular case, they want 1800 bucks at least. It could be 18,000, it could be 20,000, it could be 50,000, right? Because we have large investors on the other end, we have small investors on the other end. We have my people like my wife who use cosmetics on a daily basis. They may want to come in and invest in some of the cosmetics that they know that they use on a daily basis because she knows it, she trusts it, she's a user of it, and she says, you know what, I'll invest $1,000. Then you have traders like you and I, Bova, who might come in and say, you know what, I want 5,000, 10,000 at a time because I want to create a passive income stream.
Mhm.
And in this particular case, with a bundled offer, you can only bid on the full bundle. Unlike the individual offer, you cannot break the bundle. which means I have to bid on the whole bundle. And if anyone, for instance, this particular case, if I bid 1,800 or more, I would get accepted. The bid would execute. And I would now own this total bundle of 100 pieces of each. Now, as each one sells, I, the investor, would see the return in real time. But I, the investor, would see the return, but I wouldn't see the cash yet. I would be the one waiting, like we spoke before about this, for the marketplace, in this particular case, Amazon FBA, to pay Vova, or pay the seller, I should say. And at that point, the system would extract that cash from the seller in real time and send it to the investor. Make sense?
The auto accept is 1,800. So at that price, that's what the seller decided. He's happy with that price for that bundle of items. But then if someone bids not 1,800, but rather 1,700, what will happen then? The seller will get notification, but not auto accept it, and then it's up to them to see what's up.
Here's the great part about this. This goes beyond just investing. What I like about this is now you're absolutely right. The seller would see the bids that are coming in real time. They would see all the demand for that product. Okay. And if it didn't get accepted, they would see what people are bidding on and how much they're bidding. And it's up to them to manually accept it or to let it go.
Mm.
Now, if it gets auto accepted, great. But if it's not auto accepted, the seller still has the ability to see the offers, the bids that came in, and accept them manually. Okay. But what I like about this as a seller, you're a seller, Vova, you'll be able to see the demand for that product. So you'll be able to see how many people are interested in bidding on that product, even if it didn't get accepted, which would tell you, should you buy more of those products, right? Are people a believer in that product? This kind of becomes a bit more of just an exchange. Now you have data that you never had before. The interest level that you have from investors out there for a specific product. If you see that people are bidding thousands and thousands of quantity for a particular product that you don't have in stock of that many pieces, well, you know what to do. You know to extract some cash and go buy more of those goods, right? Because not only are they selling on the retail front of these marketplaces, but you have investors waiting to take a piece of it.